Audio check. I checked the audio today. What's up, sons? It's Blind Run with Son of a Tech once again. I am sharing out the stream real quick. Make sure we get everybody in today. If you're enjoying the crypto mining morning shows, make sure you hit that like button and that share button. Share it out with your friends so they can be up to date on mining as well. Camera stability, you know, I'm as stable as a three-legged table, but I'll get it all figured out one day. I am in talks, by the way, with the guys from Ergo to get you guys the updated information on how the vote's going to take place, because there are some stipulations there that I was unclear on, and I'm hoping we can get some clarity on that hopefully by the end of the day today. So it'll be in a separate video because I did not get anything kind of flushed out yet for today's morning show. So if you're interested in that, just make sure you have notifications on, that sort of thing, so that you guys get notified when, of course, that video launches. We're basically just going to be relaying the information to you guys regarding the monetary policy changes and the payouts to miners and how you can vote on it. I'm just going to give you guys that information so that you're aware. If you want to have a say in that, you can actually have a say, and tell you how you can have a say, because that's the thing that for me, I didn't understand fully and needed clarity on. So I'm in talks with them. And then I believe I'll be having next week a more in-depth discussion on other things with Kush T himself. Once again, he's been on the channel before. While there is a language barrier there, you know, it's still super important to pick their brains, figure out where it's going. We did learn a lot of things last time with his interview. So if you're curious on that, that should be coming today. Thanks everybody for being here. We have LOLMiner releases version 1.41b that we're going to be talking about, as well as modifications to the Flux node setup. There's going to be modifications to not only the actual amount of Flux you need to stake per node, but also there is changes to basically the size of the VPS that you would need to purchase essentially to run it. So that's going to be important news for everybody hopping into Flux. Then we're talking about Ethereum showing higher liquidation than Bitcoin at this time, which is part of the reason why that's down, which also translates into, of course, Ethereum itself as far as the mining goes and the price and all that being down. So we'll discuss that. The RX 56 or 6500 XT, excuse me, is also getting pricing at least overseas in euro, and it's not looking like it's good. It's definitely not looking like it's that 199 that was initially anticipated or announced, unfortunately. So we're going to cover that as well. So before we get into it, as always, we're going to run today's sponsor. Today's sponsor is pretty much my go-to for ASICs, albeit, of course, I'm not a huge ASICs guy. So keep that in mind. They are the ones, though, that I know you can get product from if you order it from them. They ship it. It's awesome stuff. If you're looking for ASICs, go through there. At the end of the video, of course, typically, or at the end of the live stream, we typically are near the end before questions. There we go. Is all the clarification done? We go ahead and review, you know, what may be the best purchases for the ASICs. The barrier to entry, obviously, on ASICs is a little bit higher, so there is that. Let's run it. Today's sponsor is BT Miners. Purchasing mining equipment online can be dangerous. With all of the fake storefronts and scams, it can be hard to find a reliable source. That's why when BT Miners reached out for a channel sponsorship, I started by verifying that ordering and delivery went smoothly with a purchase of my own. If you are looking to purchase ASICs hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners is a trusted source by both ASICminervalue.com and cryptominer.com. Follow the affiliate link in the description and use promo code FREESHIPPING2021 for free shipping on your order. All right, there you go. Make sure you guys use those promo codes. There is the promo code, of course, for the free shipping right now, which is definitely going to be needed if you're shipping from, I believe, they're Hong Kong. So you do have a significant shipping cost, so that is important to use that code. Let's go ahead and talk about LOLMiner version 1.41b. Hopping right into it. This was released 15 hours ago. This is kind of back-to-back releases of LOLMiner kind of going on here. So let's read the disclaimer, because obviously there's something going on and there's a reason why all of these changes are coming about. Obviously it has to do with TON. TON's been what LOL's been trying to add support for. So here we go. This is from the dev. And it says, quote, "I would like to start this change log a little unusual because I think it is only appropriate to apologize at this point. When I started writing the mining software for TON, I was quite aware of how the GPU code should look like. But the system to connect to the pools turned out to be much more difficult. Respectively, I was still very unfamiliar with the topic HTTPS. For this reason, I reused a piece of code that was already used for the DOH code without considering that a direct copy of this approach will not be able to reuse an existing connection. Unfortunately, this was not noticed during testing, as on a small scale there were no problems. But in real world use, this has caused significant problems on some mining pools for TON, effectively a DDoS by mining software. Even though the goal was, of course, to write a software that handled all current pools, and that is a suitable solution for all TON miners, I was surprised how well the software was accepted in the last days, and in the end therefore became a victim of its own success due to the above mentioned problems. So it has caused considerable problems for all of us, the miners, the operators of the pools, and last but not least for me, which I would like to apologize herewith. I thank a lot of the TON community for your elaborate feedback in the last days, and especially Danila Volkov for giving me the final hint to find the root cause of all the issues. I hope the changes in 1.41 will ensure that this history does not repeat itself. Have a nice day." So if you guys recall, essentially not too long ago, I covered the release of the LOLMiner and support for TON. I personally began testing it. The day I began testing it was also the day that TON-pool went down. And it is looking like, if you guys can connect the dots here, essentially utilizing LOLMiner, which myself and probably a lot of y'all did as well, and connecting the TON pool created a DDoS effect, which is why the pool was shut down. Now, does that relate to the hack of the pool actually losing, of course, the TON that was in the pool wallet? Probably not, but there were definitely issues going on there. For example, the projected outcome for 24 hours of mining with my hash rate on the RX 6000 rig was supposed to be like well over 20 to 40 TON, when in reality, after 24 hours of mining with LOLMiner through HiveOS, resulted in about 3 TON. So I immediately shifted off and put that rig back on Ethereum. And that is where we kind of ended the day. My question is obviously going to be, how much trouble did this cause? Could this be related to, you know, the hack? And if so, how does that relate, essentially, if there is any connection there? But I don't know exactly at this point. I'll have to do some research into maybe the TON pool Discord and kind of see what's going on. It's important I think to note that from a developer's standpoint, admissions like this, and obviously like corrections and making sure that it's transparent, is super important. So I have a lot of respect for this sort of behavior, essentially, and I think that the LOLMiner is doing the right thing here. And one of the things I think just in general in life, if you guys can understand this concept, things get a lot better. And that is that we all make mistakes. It's your ability to both admit and resolve those mistakes that is more important than anything. Being stubborn or trying to hide mistakes, etc., can get you in trouble. And I have done that a lot in my life, and it's taken me many years to get better and better at that. And I think it's always something that you have to be working on personally. I try to do that with this channel and set an example. And obviously when I see examples like this, I like to point them out and give kudos. So good job to the team at LOLMiner, to the dev here. And let's go ahead and go through the rest of the patch notes. So changes: rewrote the complete HTTPS connection stack in the TON pool connector so the connections can be reused for a significant lower load on the pools. Improved performance of NVIDIA TON kernels, especially significant on Turing-based GPUs. Added experimental TON kernels for NVIDIA Fermi and first-generation Kepler GPUs. Altered fee pools of TON to distribute better to different mirrors to reduce load on single ones. Implemented a system that can detect connection blocking in TON and will automatically choose alternative mirrors for the known TON pools in case of problems. Users on TonCoinPool.io Stratum mode, the TON mode 3 switch, can now specify a worker name via the worker switch or by adding a worker name to the wallet separated by a dot. Other TON mining pool protocols will ignore both because most pools do not accept worker names send. And that's because TON, which I have been working on a guide for TON, obviously because of the issues, it got put on the back burner. There's like video recorded and everything, but there were issues. So it was kind of waiting on this essentially. And so I'll give it another shot and then we'll try to go through the how-to for it, because the TON pool configurations utilize the Telegram bot, which is significantly different than anything you've probably experienced in the past with your traditional mining pools, say like ethermine.org or Flex Pool, etc. So because of that, I think the guide's definitely needed. But once again, with the guides on this channel, they're just to show you how to do things. It does not mean that I think that TON's going to go anywhere or is super profitable. If it pans out to be, then of course we'll cover it just like we did with Flux, etc. So there you go. Fixes. Fixed a bug with an extra / at the end of HTTPS or WSS addresses will no longer cause the connection to fail. Fixed bug: infinite cycling of TON connection attempts in case of attempts to swap to failover pools. Fixed a bug: failed DNS resolve ending in miner crash. 1.41a fixed the miner now also does load balancing on error 1020. This would have resolved itself once users swapped to 1.41 from a buggy older version, but might speed up pool recover process. 1.41b, which is the one that we're going over right now, fixed a bug with seed handling that caused a high rate of defect shares on pool.tonuniverse.com in TON mode switch 4. And 1.41b fixed a bug with the TON universe pool in the TON mode 1 that caused the miner to reconnect after a share was submitted. Obviously that could cause that DDoS effect if it's getting a share, submitting it, reconnecting, submitting a share, reconnecting, submitting a share. That definitely sounds like it would probably be an issue if I'm just thinking about it there. So, all right. So there is the update for LOLMiner version 1.41b. It's much needed addressing to the community of issues that were going on so that we're aware of it. If you are trying to mine TON and you are on an older version of LOLMiner, please stop now. You're probably causing tons of issues for the pool ops, and it's going to be a headache for them. So if you want the project to do well, which if you're a miner and you're trying to mine it for profit, you probably do, get off of the older version of LOLMiner, move to 1.41b, and, you know, give your fellow pool ops a break here, because I'm sure it's been hectic for them trying to figure out what's going on. let's talk about Flux. So I hit another block on Flux yesterday, so I'm super stoked about that. That's like 3 in a week. We had 2 days of nothing, but we did get another one yesterday. So that's 3 blocks total with like 350 solutions a second, which is amazing. And things look to be getting even better because originally with the price of Flux as it sits right now, it was super difficult to even fathom getting to the point of being able to create a node at all. You needed so much Flux that it would cost tons to go ahead and create a Flux node, and I definitely wanted to get into that so that eventually I could create a guide for it. Now, the other part about creating a guide for a Flux node is the fact that typically you need probably at least 2, maybe 3 sets of the amount for the node to create the guides. Now, I've done master node guides in the past. They are very expensive to do guides for because if you want to do it right, it's hard to go ahead and go through the process a single time and get everything into the tutorial correctly the first time. And then on top of that, you know, it costs money, the amount of Flux to build those nodes every single time, especially when we're talking about something that takes an initial investment. So I'm happy to see this. It does mean that I can get close at some point to actually creating a node guide for you guys and sharing it. There are node guides out there. You can follow the official documentation. It's probably going to work out fine, but like I like to do, I like to have a guide for you guys on this channel as well. So I'm excited about this, and it's a tweet that came out, I believe it was yesterday, or let's see, I guess it came out on December 28th, but we have more information. So, new node structure launching in Q1 of 2022 with revised hardware and collateral requirements. The Cumulus node is now 1,000 Flux. The Nimbus mode is 12,500 Flux, and the Stratus is 40,000 Flux. Plus a new entry-level node launching in Q2 or Q3 will be the Cirrus, which is 5 to 100 Flux for one. Now, the important part is there are hardware requirements that will also change, and here's the details below. So your collateral is the 1,000, right? And then these are the VPS requirements that you're going to have. Part of this is due to the fact that the way that Web3 is hopefully going to function is that people will be utilizing this to essentially rent out virtual private servers to run applications on, whether that be anything from a website to something along the lines of a Minecraft server. So you have on the 1001, you need more than 2 cores and more than 4 threads. And then you need to have the ability to run 320 events per second on 4 threads. You must have 8 gigabytes of RAM or more, 220 gigabytes of storage or more. You need to have a disk write speed of those at above 180 megabytes per second. And this says you're going to need basically an SSD for the Cumulus and Nimbus, and you'll need an NVMe or SSD disks in RAID 0 for the Stratus, because that's going to be above 400 megabytes per second required above that. Now, technically an SSD can run at up to like 480 megabytes per second over SATA, but you know, translation of that through a virtual private server setup is a little different, sort of. And I'm assuming at this point that it's not going to necessarily always. Anyways, there's probably some latency and other things that are going into there that are making them basically specify this. Either way, the interesting thing is going to be like, how much does that translate in cost to a VPS? We'll probably be covering that because that will be a monthly cost if you're going to host it in the cloud. One of the issues with Web 3.0 that I do want to bring up that I've been talking about a little bit on Twitter, especially when it pertains to Flux. And this is a problem with Web 3.0 in general that they're going to have to figure out how to solve. If you have a significant investment in a node, and then you are getting payouts based on the uptime of that node, you are inclined to utilize already existing virtual private server or hosting options such as AWS or Azure from Microsoft or Google services, and or even something like DigitalOcean or Vultr, right? We've used a lot of Vultr and guys before on this channel. We've used DigitalOcean as well, and that's because you want that 24-hour uptime. The problem is that you end up re-centralizing everything, because if the point of Web 3.0 is to get off of centralized servers, but you're basically just end up hosting all of the nodes that are basically running these VPSs per these stats, so that you don't have any downtime, you're just essentially re-centralizing everything back to those cloud hosting solutions once again. And so, as a responsible participant of the network, ideally your goal would be setting up your own infrastructure, which I'll be trying to talk about here at some point, because once I get internet in at the mining facility, we will be setting up our own server stack. I have some old Dells. We'll be utilizing those, and we will be putting them, in HA failover, going over all of that with like a VMware stack. That's what I used to do for a living, by the way. So at least from that perspective, I should have enough knowledge to be able to show you guys how to do it. From a responsible perspective or a principled participant within Web 3.0 ecosystem, this is something you probably want to consider. The reasoning why is, while you will have, essentially a larger chance of, having the node down, running the node yourself and trying to take all of those things into account so that you basically are providing something to the network that is truly decentralized, would be ideal. Okay. But I understand that being an idealist isn't necessarily in the profit. So this is kind of the problem with Web 3.0 that I recognize that hopefully we can figure out how to resolve in the future. Storage is another one. This is also going to be a problem, obviously, on the consensus mechanism portion of Ethereum 2.0 post-merge, which I have talked about in the past. The rest of the stats here, internet speed greater than 25 megabytes a second up and down on the Cumulus. These are going to go up to 50 megabytes a second up and down on the Nimbus, and 100 megabytes a second up and down on the Stratus. There is no mention here of necessarily anything that is like latency driven, but I'm sure there will be latency requirements here that will be talked about. Now, when you talk about the devices, this is what I was talking about before, good VPSs, so DigitalOcean, Vultr, those are examples, or even going into AWS or Azure, etc. You can also rent those dedicated servers. It's usually denoted within VPS solutions as bare metal, and bare metal means that basically you're getting access to the bare metal of whatever server that is. And then from there, you can go up. Now, there are self-hosting servers, which is the last option here that I did discuss. And that would be what I would call the ideal state of all of this that you would want to get into. So here are also, we do have the update for the newest one, which will be the smallest one, the Cirrus. Collateral required is 5 Flux, but that's still to be determined. It'll take more than 2 cores, more than 4 threads. You will need the 320 events per second available on the 4 threads, the 8 gigabytes of RAM, 220 gigabytes of storage, 180 megabytes a second on the disk write speed, and 25 megabytes up and down. So this is saying, though, devices that you could run it on, which definitely you could run in your house: an NVIDIA Jetson Nano, an NVIDIA Jetson Xavier, an NVIDIA Jetson AGX Orion, a Raspberry Pi 4B, which is awesome to see, a Honeycomb LX2, and then, of course, it goes into the VPS solutions. We will probably, when this launches, do a Raspberry Pi guide, because we do have some Raspberry Pis that we're running other nodes on, specifically, I believe, Ravencoin. And then, I don't know. I probably have done another one. I think I have like 4 running, but I don't remember what they all are for, actually, off the top of my head, because none of them make any money. But this would be a way to utilize a Raspberry Pi to generate some additional revenue. Pretty cool stuff. So that's where we're at with the Flux node updates and how much it's going to take essentially to both stake into it as well as run the nodes for the system. Super awesome. I think that it's great that we're having some smaller options. I'm really excited to see an option to run a Raspberry Pi, because obviously, like, that's going to open up more decentralization for the network. That doesn't necessarily mean that it's going to provide the amount of power needed for Web 3.0 applications as a whole. That's cool enough to, like, you know, run like a dev stack on or something maybe, but not really anything significant, I think. So I still think the Web 3.0 problem to solve is going to be getting off of those centralized services at the end of the day. How that happens, when that happens, is yet to be seen, because at this point, to be honest, I don't really see a really quick path to that, meaning like this is probably decades out before that something like that's resolved. It will probably be resolved with something like, you know, mobile devices, cell phones. That would be kind of where I would think it would end up moving towards as far as like Web 3.0 processing. There you go. All right, so let's hop into Ethereum seeing higher liquidations than Bitcoin. This is coming from CoinDesk. It's posted today at 4:05 a.m. Central Time, so about 6 hours ago. And the title is, you know, Ether sees higher liquidations than Bitcoin after falling under 3.2K. Traders racked up 182 million in losses on Ether tracked futures products in the past 24 hours. We talked about the futures expiring yesterday for Bitcoin, and essentially part of the dump related to that. This is just the Ethereum version of it. That is 14 million higher than Bitcoin tracked futures, which usually sees the largest liquidations in the crypto market during a comparable period. Liquidations occur when an exchange forcefully closes a trader's leverage position as a safety mechanism due to a partial or total loss of initial margin. This happens primarily in futures trading, which only tracks asset prices, as opposed to spot trading where traders own the actual assets. Not your keys, not your crypto. I don't recommend getting into futures. Futures is something that we discussed in detail previously this week. So if you're kind of wanting to understand the mechanism behind that, go ahead and find that video. I believe it was yesterday or the day before. The important note about futures is that while it does serve a very specific purpose, when we're talking about commodities like physical goods from farmers, etc., it doesn't necessarily but it doesn't necessarily serve, I think, a legitimate purpose in things like stocks and cryptocurrency like we see here. I'm not really a fan of it, but more than 87% of the total 182 million in losses come from long positions, while only 22 million worth of short positions were liquidated. Majority of liquidations occurred on crypto exchange OKEX, which saw just under $79 million in losses, followed by FTX at 27.5 million. Longs are future positions that bet on rising prices of their underlying assets. Shorts, on the other hand, are future trades that bet on declining prices. Ether lost the 3,300 support level in early Asian hours on Friday, plunging to as low as 3,113 before briefly gaining over $90 at the time of writing. Friday's drop was a continuation of a market-wide decline that started on Wednesday. The U.S. Federal Reserve released the minutes of its December meeting that signaled tightening of financial policies and caused a sell-off in risky assets. The Relative Strength Index, RSI, reached oversold levels again on Friday after briefly venturing out of that zone on Thursday night. RSI is a technical tool used to measure the magnitude of price movements, and oversold levels imply assets might be undervalued after a price correction. Ether failed to break over and hold above the $4,000 price level in December 2021, implying a weakened market at the time. Among the major sellers in the past 2 months was the Ethereum Foundation, a nonprofit that oversees development of the Ethereum network. The foundation moved over 20,000 Ether, worth over 90 million at the time, from its cold wallet to crypto exchange Kraken in November of 2021, which may have contributed to some of the selling pressure in the past 2 months. I want you to pay attention to that closing statement, and I want you to really understand exactly why this is a problem and why people have an issue with Ethereum in general and why they call it centralized. What we're talking about here is a foundation that is non-profit, that is controlled by, you know, the developers, and directly influences the price of Ethereum. We've known that these have been issues and that it could be a potential problem in the future, and clearly it plays out pretty much every time with Ethereum, especially when we see these types of things. So I just want you to take note of that. Obviously, where Ethereum sits as a project from the programmable blockchain has it sitting in number 1, but pay attention to all of the coins that are doing this. I actually wanted to bring up Chia as well, kind of a side note here. Let me see if I can pull this up for you guys, because it was pretty concerning. Let me see if I can find, I think it's under tweets and replies. I can find the original article. Give me 1 second, boys, because you'll find this interesting. All right. So what we have here is essentially a talk about Bitcoin, and then Chia gets involved in discussing it. Okay. And what I'm trying to demonstrate here is the perception of cryptocurrency needing to fund developers, okay? And I want you to think about this, because what we're talking about is new type of money, and then we'll kind of talk about the differences between Bitcoin and Chia, for example, here. So Alex Gladstein went ahead, blue check mark, said the first step to understanding Bitcoin's energy use is to come to grips with the fact that A, Bitcoin is valuable to tens of millions worldwide who lack access to the financial system you enjoy. B, if you want neutral, open, decentralized money with no rulers, you need proof of work. Keywords here that you need to pay attention to is decentralized and no rulers, okay? I want you to really think about this. Bram Cohen from Chia, who we have had on the show and we've talked to, said that proof of space and time keeps the security benefits of Nakamoto consensus. In fact, improves upon them without all the energy waste. To which Adam Back said, please stop FUDing Bitcoin. Okay, so that statement in general is an advertisement for his coin and specifically his consensus mechanism when we're talking about Bram in general. So let me get rid of those messages. I just realized those were up, but it's fine. You guys can see who I talk to. It doesn't matter. All right, so there's nothing necessarily wrong with that statement other than no, there's nothing really necessarily wrong with that statement. You would have to, other than maybe you have technical reasons why proof of space and time isn't as good as proof of work, which is fine. So then Adam Back says, please stop FUDing. And Gene Hoffman, who is a part of Chia as well, on the board, says, if you have a technical argument that what Bram is saying is incorrect, make it. And I think that is fair enough. And Adam said, is against your interest, though you may not recognize it, to FUD Bitcoin. If Bitcoin runs into regulatory difficulty, in small part thanks to your FUD, which these are bad arguments. Adam Back's arguments are bad, by the way. you should be able to criticize Bitcoin and not have people say FUD, FUD, FUD. And here's why, okay? And where this kind of goes along the lines of like free speech to a certain extent. And like he can say that, and then I can say arguing FUD essentially is a non-argument. His points are invalid at this point. All he's trying to say is essentially that you shouldn't FUD Bitcoin because the regulatory would hurt your project. Okay, whatever. That wasn't the original argument. The original argument was that proof of space and time is better than proof of work. But if we go to the very beginning in the OP, the idea is using proof of work to keep it decentralized with no rulers. When we're talking about, in the case of Chia in particular, what we're talking about is not only both rulers, because they have board members and developers that are getting paid directly from the project, but we have this new consensus mechanism that should supposedly be better than Bitcoin. In my opinion, nah. All right. Specifically for those two reasons. It's not decentralized and it does have rulers, right? Now, decentralized, we could say it's decentralized as far as the processing power goes. So I don't like these arguments, though, is the point. But he did say your pre-mined coin will be more vulnerable to regulatory attack. So here's what we're talking about. Chia being pre-mined, that sort of thing. Here's the defense, and this is where it gets sketchy from Chia. In making your political point, you may be doing the world a disservice by not forking proof of work out of Bitcoin. Proof of work's energy consumption is a far larger attack surface than a pre-farm that keeps developers from begging on GitHub. This is where we have a problem. And here's the problem. All right, is that if we're talking about a currency, if we're what are the biggest problems with like fiat currency in general? Is typically that is controlled by the state, and the state can therefore manipulate that currency to their benefit. So if we want to get rid of that, we need to basically focus on a couple things, which is removing the state and removing any entities, capitalistic entities or whatever, from actually controlling the supply of whatever currency. And just by making this statement, he's making it clear that the point of creating the currency is to create wealth for the developer of said currency. There's a reason why it's good that Satoshi Nakamoto's main wallet hasn't ever been liquidated and why he's anonymous. It's because what that develops is a trust in that currency that you don't have a financial incentive tied directly to a developer that may manipulate monetary policy. And the more and more I look at almost every single cryptocurrency project where I give a lot of leniency to is typically with programmable blockchain. It definitely still makes me lean towards Bitcoin as the maximalist portion, the only thing that is currently out that does act as it does to reduce the interference from rulers and from people trying to manipulate currencies. Basically, just in his argument here, what he has done is reduce my trust in Chia as a project, because he's missing the point. And then, of course, he had to make the boneheaded statement of, I've been in cryptocurrency since 1997. Here's where we'll give him leniency. Obviously, if we think about cryptocurrency, we say that's not possible to be in it since 1997. But if we really wanted to get into the roots of cryptocurrency, we could get into, of course, the Cypherpunk Manifesto, which then would lead us, obviously, into basically being able to secure emails and communications, which kind of leads us into cryptocurrency. So I'll give him that. Maybe he's been working on that sort of thing, email encryption, etc. Cool. Maybe he's been working on encryption and that's what he considers cryptocurrency. I'm just really not liking this guy. And specifically, I shouldn't say this guy, specifically whatever whiskey he was drinking and talking shit on last night. I'm not down with it, okay? So I wanted to get those clarifications in because, and this isn't to dig on necessarily like any individual or any individual project, as more as what I wanted to do is relay those ideas to the best of my ability on the difference between Bitcoin and everything else in the market. That's kind of what I'm trying to get to or get at. So hopefully you guys can understand where I'm coming from as far as that goes. Now, in more news, bad news, it looks like, unfortunately, coming from WCCF Tech, the Radeon RX 6500 XT may not launch at MSRP, as card reportedly costs 299 euros in France. It looks like AMD's Radeon RX 6500 XT graphics card would be unable to launch at MSRP pricing, as a report from Cal Kotlin claims. Now, this is extra disappointing because what we anticipated from the release of 6 nanometer, and this is going viral right now on the Linus Tech Tips channel, is that the Intel GPU and these new AMD GPUs would be on 6 nanometer, which is a new manufacturing process, which is a whole new set of wafers, could alleviate the shortage of GPUs that we have been experiencing. However, seeing that the MSRP is not going to be met, I'm not sure the production of 6 nanometer is up to snuff to handle the production required for Intel and AMD at this time, and that's going to be a problem. So AMD's RX 6500 XT was announced just a few days ago for $199 US, and AMD has been very confident that it would be the most accessible graphics card ever made in the past 2 years, and they have taken several steps to make sure it is just that. We have detailed some of these measures over here in this article that has interviews from Lisa Su. But here we go. So to keep it simple, the AMD RX 6500 XT has 4 gigabytes of GDDR6 memory, since it targets the entry level, a sweet spot 1080p gaming segment. It features a PCIe 4.0x4 interface and has cut down encoding decoding capabilities compared to other RDNA 2 GPUs. The first two have been specifically put in place to make sure that this card is the least attractive option for crypto miners, but the last one is a questionable move. Just days ago, AMD CEO Lisa Su confirmed that their $199 US price isn't just on paper, but it will actually be what you expect the card to come at. And that's what she said in the article. But it looks like retailers and distributors across the globe have other plans for the entry-level card. As reported by Cal Kotlin, via video cards, the AMD Radeon RX 6500 XT will have a price of 299 euros in France, including taxes. That is a 50% increase over the MSRP and is pretty much in line with the inflated rates of other cards such as the 6600 and 6600 XT in the retail GPU segment. While this is just from one retailer, it looks like that most users, if not all, will get the card at the advertised $199. Other than that, the users over at AMD's Reddit have spotted how the Radeon 6500 XT offers the same teraflops with less encoding decoding capabilities of the RX 480, which launched at $199 for the 4 gigabyte variant too, and was actually available at that price, unlike the current generation of cards. So, I mean, they're saying that we may get some at $199, but seeing them already listed for $299 is quite disappointing, in my opinion. And I'm not confident that there is actually enough shipping of the 6 nanometer to really alleviate that. From a mining perspective, I think they are correct. I do think that the 64-bit memory bus, even on something like Flux, is going to be a problem. But we do get higher clock speeds. The only algorithm that I know that really doesn't care about memory is Ton, maybe with the corrections in Toncoin. But are you going to invest in a GPU specifically just to mine Toncoin at $199? We'll have to see what happens. But we'll be testing it on this channel if we can get our hands on it, along with the RTX 3050, which should be a little bit more usable across multiple algorithms, because of the amount of memory and the memory bandwidth available on it. Okay, let's get into my mining performance for the week, or for the day, excuse me. As always, we like to show off, and we have 14 workers online. It looks like I have one that just popped offline just now. Weird. All right, I will be checking that out today. It shouldn't affect our unpaid or anything like that, but we have $272 a day. That's before power. The profits are definitely taking a huge hit. Current effective is 5.43 gigahash online. I will need to go get this 395 megahash back online. I'm not sure exactly what happened, but I'll take a look at it. We've been up for like almost all week without any issues, so it's surprising, kind of disappointing. I didn't want to go to the farm today, but you gotta do what you gotta do. Here's my solo Flux mining pool, and we did hit another block within the last 24 hours, so that's another 36 Flux, coming in at 89.67. For the week, we are at $269.01, not including parallel assets. If we start to include parallel assets, well, we've only been paid out the 22, but as you can see, we have quite a few more coming in. But we did make already another $55 on that, putting one rig with 4 cards, 23080 Ti's, 23060s, 5 cards, and one 3070 Ti at essentially the most profitable mining rig in the farm. So it's pretty good. Now, I did hear of people that are hitting blocks, so awesome, kudos to all y'all. Red Panda hit a block yesterday as well, I believe, and a lot of people are not hitting blocks. Now, here's the thing that I found with the people not hitting the blocks. They don't appear to be on the minerpool.org. So if you're having some issues there and you want to see if minerpool.org is working better, it appears that everybody that's hitting blocks is using the solo pool on minerpool.org. So maybe take that into consideration. So there you go. Let's go ahead and talk about the mining profitability according to what to mine for the day. The RTX 3090, which we will go ahead and adjust the Zell hash out and calculate this in. We have Ethereum in first place, making $4.95 a day after power. We have an influx of rising difficulty on Ella. We reviewed this coin earlier this week. You really only have one exchange. It looks like a dead coin. Don't touch it. You have Cero in third, which we haven't really done a review on, at $3.39 a day after power. Conflux in fourth, which we have reviewed, and some of the problems that people have there is it is a Chinese coin at $3.30 a day. And then Flux, which is kind of the big boy, the big daddy, everything everybody ever wanted and something to replace Ethereum right now, is at $3.29 a day after power on the RTX 3090. We'd have to bump down a little bit further to get into Ravencoin, but Ravencoin is still above $3 a day on the 3090 at $3.01. Profitability is absolutely getting crushed right now. So if you can survive this time and continue to survive, then you're doing good. Remember, keep calm and mine on. Yeah. And go order that shirt. Links in the description. All right. RTX 2080 Ti. Let's go ahead and take a look at it. We have Cero in first at $2.33 a day. Obviously, being in first over Flux is interesting because Flux has been kind of the thing to go to on the 2080 Ti. I may be forced to look at Cero more seriously here coming up because it keeps showing up on the top of what to mine. Flux is coming in third below Ethereum. Ethereum at $2.34 a day after power, and Flux at $2.19 a day after power. Cortex coming in fourth there, which is different than Conflux. Still Chinese, I believe. $2.29 a day after power. And then Ravencoin kind of dropping even further. Still above $2 a day, though, on the 2080 Ti at $2.04 a day. Now, a thing to note about Ravencoin is that we did hit that price prediction. And it does look like, of course, the halving is going to hit those price predictions, depending on, of course, the bear market. and you may want to take a look at that. It's looking hopeful on Ravencoin, especially as we get closer and closer. I think it's just a few more days until the halving, which should, in theory, increase the price of Ravencoin beyond what it's at right now. All right, so let's go ahead and take a look at the mining pool stats. I think the big ones, of course, is going to be like Flux. Did we see a huge increase? No, we've actually seen a decrease in hash rate down to 2.4 mega solutions a second. We also have a corresponding difficulty decrease, so that is looking good. That is much better than anticipated. Let's go ahead and take a look at Ravencoin. Ravencoin had a recent spike. Primarily, I would assume that is due to the impending halving and miners wanting to get that 5,000 block reward before it is reduced to 2,500. Now, Bitcoin had a dip in, of course, their hash rate this week. That hash rate has not come back online. And that is, to the best of my ability, or of my knowledge, is due to the unrest in Kazakhstan. And I thought maybe because we had different pools experiencing the dip that this wasn't the case, but it does appear that it is directly due to that. I didn't know that they had been spreading out their pool selections so good, but I mean, that's good news, I suppose. But we are still seeing a pretty big drop there. If you do have ASIC miners or are looking at purchasing ASIC miners, I think Bitcoin's a good option. I think the US has quickly become the #1 provider of hash power to Bitcoin. And as long as that continues, my assumption would be we're also looking good regulation-wise, because an industry that large is going to be hard for a capitalist country to be like, no, you can't do it. So this is all good news, I think, in general. But let's go ahead and talk about mining pool profits. Last 90 days, Crazy Pool in first, Mining Pool Hub in second, and Ethermine in third. Last 60 days, Crazy Pool in first, Mining Pool Hub in second, and Flex Pool in third. Last 30 days, Crazy Pool in first, Mining Pool Hub in second, and ZET in third. Last 21 days, Crazy Pool in first, with Flex Pool in second, and Mining Pool Hub in third. Last 14 days, Crazy Pool in first, Mining Pool Hub in second, and Flex Pool in third. Last 7 days, Crazy Pool in first, ZET in second, and Flex Pool in third. Last 3 days, ZET in first, Mining Pool Hub in second, and Nano Pool in third. And the last day, we have Crazy Pool in first, with ZET in second, and Mining Pool Hub in third. Taking a look at ASIC miner profitability, the KD6, which is soon shipping for like $38,000, is doing $202 a day. And then moving down from there, the KD5 is in second. And then the Inosilicon A11 is basically in third, which is going to be ETH hash. Highly recommend staying away from ETH hash ASICs. As you can see on what to mine, there are not a lot of Ethereum options that are going to be able to handle the hash rate from ASICs onto them, in my opinion. Plus the ASICs that are already in deployment that will have no choice but to move to something like Ethereum Classic or another ETH hash coin means that, you know, these purchases are probably low on the totem pole for me at this time. Now in fourth, we do have the Antminer L7. I still don't know anybody that's gotten one in at all, so I'm not even sure these are necessarily on the network, but their projected profit would be $100.92. IB Link is a great option, $40 a day. KD2 is at $45 a day. And then moving on down from there, you know, you have your handshake miners, I think. So that's your ASIC market for today. The sponsor of the channel or the video today was BT Miners. And they still have their combo deals. The best combo deal, if I recall, was still the $20,000 KD box and Antminer D7. Let's go ahead and take a look at the KD box. Profitability. $12.21 a day. And what's the D7 at? And the D7 is at 21, so that's $33 a day. It looks like this may not be the most profitable on here anymore. Let's go ahead and do the calculation out. 20,000 divided by what? $33, let's say. That's the 2-year payoff, so obviously it's not looking good anymore. Let's go ahead and see what other options are going on here. There's the handshake miner. That was the one that was looking good now, right? So you got the HS5. It's still only 16 bucks a day. The D7's still outperforming it. It does drop the price to 14.5. But it's, what is that? $32 a day. Is that 16 plus the 12? No, that's 28 bucks a day. 14.5 divided by 28. It's a better ROI, but not much. 517 days. Not great. You got the LT5 Pro for 15. What was the LT5 Pro at? That was at 18 bucks a day plus the 12. That's 30. 15,000 divided by 30. That's a 500-day ROI, so a little bit better. This is the best one so far. The X5, you get 4 X5s. That's going to cost you a lot in power. Even if that was good, I wouldn't do it. I wouldn't recommend grabbing 4 gold shell X5s for that bulk purchase there. There are the Antminer L7s they say that they do have here in this combo deal. They have basically the same options here. They have the HS5 for 30. You can get the LT5. I would probably do one of these two. Let's just calculate this out. $32,000 would be the HS5 being 16 bucks plus the L7 at 100. I think nobody's buying the L7s. I don't know. I should ask them about this. 32,000 divided by 118. That's a 271-day ROI, less than a year. No significant algorithm or network changes on either one of those that I'm aware of coming up, so that seems like a decent good deal. Now it does say the January batches, so that's now. I don't know what day in January those are going to ship. You also have the go-tos, the Bitmains, the S19 Pros, all that sort of thing. You can go through and run all the calculations, see if there's one that you're interested in purchasing. I'd lean towards Bitcoin, probably, in general. Everything else is going to be like dependent on your risk tolerance. Let's get into questions today. I'm going to sit down. Amiga's PC says Bitmain never made the L7. See, this is weird. I'm going to get a hold of BT miners and see what they're talking about with the L7s, guys. Because I haven't seen any of them anywhere. I really haven't. I haven't seen any pictures in the ASIC stuff that I've covered or anything like that. If we go to the Bitmain store, Bitmain shows them. It shows them sold out right here. And that's the official Bitmain page, I think, right? Yeah, because that's just the subdomain is shop.bitmain.com. I've never seen one in the wild, though. I'll get with the supplier and see what they say. I'm kind of curious about that. Okie doke. So, questions, as always, go in the order of course, priority with the Super chats. Super chats are not required. Always appreciated because it helps support the channel, especially in bear markets like this. Then outside of that, of course, just tag at Son of a Tech, and I usually get through most of the tags as well. So ERT Ted said Son of a Tech, at Son of a Tech, MSRP does not include government tariffs. Those are tacked on top of MSRP. Then we get our price, thus we'll never get MSRP pricing. That makes sense. And then France has higher tack-ons than maybe like the US or something along those lines have. Apparently saying Gene Hoffman and Bram Cohen are Muppets is hidden. I went ahead and showed that one. All right, let's get through this. Golden Wolf says, at Son of a Tech, good morning from Seattle. Good morning from Texas. Hope Seattle's doing good, bud. R252 says, at Son of a Tech, hey, as far as Flux node, any good reason to not buy a used Dell server and deploy your own node versus VPS? You can usually find them on Facebook for $300 to $500. You can also check out ServerMonkey, which you'll also get warranties on your used hardware. So I use ServerMonkey for a lot of things, as well. That's where I've gotten my servers outside of like, work, I suppose, because most of my hardware came from work. But yes, purchasing those are good. Obviously, what is your preferred setup for that, right? So there's a few options, right? You could rent rack space at a hosting, like a co-location. Depending on how many nodes you're going to run and the profitability, you may want to wait on that. But that would be an option. Running out of your house, like server stacks in your house, which I have done, are not ideal, but you can also get like AC cooled racks that you could put in your garage, maybe that sort of thing. And it depends on like where you live, but you also want to make sure that you're controlling like condensation and all of that. You're going to want to make sure that you have a UPS that is going to at least keep the system up if there's a power blip. You're also going to want to work on redundancy, and that can even include, getting a business internet that at least fails over to a wireless option. Most company or most internet or ISPs do offer that as an option. But obviously like 2 connections in general, overall is going to be like ideal, right? So you have AT&T and Spectrum or something like that with a failover setup. The problem with these structures or this infrastructure that you need to set up, and that's kind of what I used to do for work, so I'm aware of it, is it gets very expensive if you want to do it right with full redundancy, which means 2 matching servers. In the case of like the high-end nodes here, you would end up having like 2 really high-end servers because you're having that NVMe cost. You could probably get away with, SSDs running in RAID 10, I suppose, right? Which is probably the route I would go because that'd be a little bit cheaper. But even that's going to be expensive as all heck. You don't want to be running in RAID 0 like they recommend in that on those SSDs. RAID 10 will get the speed of the 0, but also have the redundancy of the 1. However, that's going to cut your actual storage capacity in half. So that's something that you need to take into account. Whereas if you did the lower end ones, you could have SSDs in RAID 5 or 6, get a little bit of redundancy, and not lose half of your storage, right? So that's something to take into consideration. That would be an option, which really makes me lean, just from an infrastructure standpoint, makes me lean away from the top node. Even though it does pay the most, the requirements for redundancy in hardware alone is going to maybe put it out of the realm of really keeping a decentralized network to me. At that point, it's like Just get a VPS, bro. All right, Real PC Benchmark says €2 for your great work you're doing for us. Thank you, my man. And then Get Global Executive Transportation, $4.99. Great stream. Keep it up. Shout out to bitcoincarservice.com. Disclaimer, you guys can go to the website, do whatever you want. I've never been to that website. I do not know if it's scammy or not, but we will do it in the shout out. So type it, I guess you could type it into your browser. Just be careful, make sure that SSL pops up and that you got a secure connection, all that sort of stuff. All right. Let's go ahead and get into some more. John Lemon says, at Son of a Tech, you think ETH will go much further down? I've been banking on the last lows being the limits through the new lows. The more it breaks down, the more futures expire, right? I mean, once kind of like cryptocurrency went into futures, it kind of started banging. What we would hope for is something like Flux to not be so tied to Bitcoin and Ethereum and be decoupled and not have futures in it. I mean, a lot of the stuff here that we're really starting to get into that I think like some altcoin channels have been talking about is the safety of the smaller cap coins in the fact that they do not have these big futures contracts. And the only issue there is that they need to decouple. Now, decentralized DeFi in general, decentralized finance, right, was supposed to combat this by, decoupling more. You have more options to swap between A, B, C, D, E, F, G. But because you have Ethereum as the primary platform for DeFi, you end up running into the problem of everything that's being within DeFi affected by the same futures contracts. So if you're looking at trading and avoiding these things, where do you go? Well, you have to go to a different platform that offers decentralized finance. So you have to go to Solana, you have to go to Cardano, you have to go to whatever, like hopefully Ergo gets a robust one, but they're not robust enough to really support this. If I'm looking right now where I start participating in DeFi, I'm probably looking at Solana, I guess, at this point. Because it's the most robust, right? And it gets you out of those big futures contracts. This is all not financial advice, and this is just my understanding of like where the shifts would happen and then trying to stay away from these big expirations. Now, the lucky part is you can look up all of these futures expirations, but you can't really predict when they're going to get liquidated either. Because that's going to be based on price. So you have to get into trading analysis. And then trading analysis is going to run into a whole bunch of other issues that you're going to not always be accurate on. Jacob Madsen says, ask Son of a Tech, do you think we have finally hit the bear market? I think that if I'm looking at it completely objectively, I say yes. If I'm looking at previous cycles, I would have expected a pump to February and then a drop off. Obviously, that doesn't appear to be happening. Since we are so close to the typical cycle, I think that we are going into a possible bear market. I make the jokes about that, but I'm also not a trader. So once again, this is just based on my very limited experience within the mining field, not necessarily within the trading field. Now I have a knowledge of of course, how the super cycles work and going through that sort of stuff and trading in and out. But my feeling is yes, but I also acknowledge I could be completely incorrect. There are different moving pieces now that don't make as much sense that change the markets, right? These futures contracts, they have really taken off. This wasn't a thing in the previous super cycle, really. The other things are like the hyperinflation that the United States is probably going to experience within the next couple of years. From a mining perspective, we have to take into account the shortage of silicon. And even with new manufacturing processes on the 6 nanometer node, it doesn't appear to me that there's going to be enough of those to go around. And they're at low level GPUs right now, not necessarily meant for mining. So from that perspective, I'm not sure that hardware prices go down either. If this is the bear market, this isn't the bottom of the bear market. I would expect Bitcoin to go down to 20,000. I'm just going to say 20,000 in general. I think it'll be a little bit above that, but it's going to be in the 20s. And I would expect ETH to be down in 2,000. And if they really screw up this merge, I mean, ETH could go away completely if a competitor takes over, is able to scale past them, which, if we look at it objectively from the perspective of like where they're going with, you know, the sharding, etc., it's not as scalable as other programmable blockchains. So if they, on top of that, screw it up, it could be rough. You know, I'd like to say that they could leave it alone, keep it proof of work. And, you know, from a miner's perspective, that would be awesome. But if I'm being realistic about it as well, the layer 2 solutions are not functioning, right? The most popular one, Polygon, obviously experienced record high gas prices as well as huge congestion to the point of just breaking this week. And I don't see layer 2 as a resolution to scalability for Ethereum necessarily. I definitely have my reservations surrounding that. So hopefully that answers all your questions. I know I kind of went on for a little bit. Detroit Iris said, Son of a Tech still interested in the light hash rate 60 Ti and 70. Also sent you an email on another topic. I'll try to check my email and get back to you. I'm not really interested in the 60 Ti, and no, I am. 60 Ti and 70 I don't have. Light hash rate versions, yeah, I'll add them to my light hash rate rig and just mine Flux with them, but have them for testing. So yeah, I don't know how much I want to spend on them because they're also older, so a lot of people aren't going to be interested in the review. You can see that with the performance of the 3070 Ti video that I recently did. Dynamine Mining says, at Son of a Tech, why did you stop running a pool? I stopped running a pool for multiple reasons. Primarily, it was coincided with a huge attack that I had, you know, basically a sysadmin that messed up and we lost money. I refunded the miners. It was $14,000 out of my own pocket. Then we hit a bear market, and you know, what are you going to do? It's really hard to run a mining pool. You have to have a lot of upstart. You have to have guys that are willing to work, but you also got to be able to pay them, monitor all the systems. You have infrastructure to worry about. At this point, like, it's not something that was like, for me, was making any money. I just lost money on it. So part of it is that I didn't do it well. So maybe I would do it again just to learn and try to get better again. But, you know, it's a lot of time too. You're talking about something that needs 24/7 uptime. You have to be super aware of changes to all of the networks. You have to be super aware of changes to even the miners. You have to just, you're constantly needing to do that. And then to compete, you have to have low fees. And if you're a low pool starting out with low fees, you can't fund all the development you need. And then on top of that, like you just end up losing money, really, unless you are to the, you know, the established guys are going to be the established guys. That's pretty much it. It's not a set it and forget it thing. All right. Jesse says, at Son of a Tech, can you post a video on what futures are? I can do, so I did it in the live stream. I'll try to go clip it. I have a lot of clipping to do right now. Martin says, at Son of a Tech, after ETH merge, would you consider mining on unminable, and why? No, I would probably just go into solo mining before I would go into mining on a mineable. And the reason for that would be is my farm is currently powerful enough to solo mine pretty much whatever I want as long as it's not ETH. And there's the most potential there. Gunmuse said he expected February as well because of the cycle, but we broke from the cycles in October. So there you go. EJ says, that's Son of a Tech, what cards are you buying at the moment? So I haven't, right now I'm primarily buying 3090s for the farm. But in addition to that, I'm trying to purchase whatever I can for review on the channel. So I have like the new Sapphire mining card coming in that we'll do a review for. Trying to get an RTX 2060 12 gigabyte, even though I don't want one. I want it for testing. I need to get an A2000 still. I don't have any of the A series. I do need to try to make a trip to Micro Center and get those. Mario said, at Son of a Tech, I'm currently mining Raptorium. What CPU coin would you recommend mining and why? I'm doing QRL because of the profitability. It's up to you. There's a guide on the channel. I believe there was a couple other ones that were doing pretty good. Toncoin is also apparently CPU mineable. I haven't found anything that like makes me want to like tell you what to mine. I feel like it's a crapshoot. Like if you want to mine something that's viable, that's going to be around for a long time, Monero, but you're not going to make a ton of money on it. All right. 1AH1 Sparta said, Son of a Tech, are you liquidate your mining ETH right now or holding for ETH to pump back to 4? I have to liquidate. I mean, it's my business. So I have stuff to pay. Gunmuse says, as Son of a Tech, would you be interested in advertising a pool? Probably not, because I still run into the same issues. Like, so if I advertise a mining pool and the mining pool breaks, then I will get flooded with people troubleshooting said mining pool. And like, I already run tech support for so much stuff just from making how-to guides that I don't feel like I want to be running tech support for free for a mining pool. I say for free, even for advertising fees, right? It's much easier to like advertise for like BT miners, right? Like they just ship their product. It's a little bit easier. Oh, advising. I'm sorry. I thought you said advertising. If you have some questions, you can shoot them over. I'll try to help you out. It just depends on my timing right now for whatever's going on. Mario says, that Son of a Tech, as ETH mining comes to an end, what cards would you recommend for get for budget miners like me? 3090 over here in Europe is like 3,000 US dollars. By and large, the best, the hint is going to be, and I have none of them, but if we're looking at Flux, the hint is 10 series. Like if you're budget mining, right? Let's look at this real quick. What is it doing? I had it up over here. Let me pull it up real quick. The hint is like the 10 series. And then, of course, obviously the RTX 2080 Ti. Because you got the Flux. So that's what I'm looking at. Just in general. Let's see. So let me pull this up real quick. What was the 1080 Ti doing again? Because I don't think what to mine's correct on it. Oh, I'd have to scroll too much, but it looks like 1080 Ti, RTX 2080 Ti, and then like if you want new cards that are going to protect you in the future, but are also performing well on Flux that are not NVIDIA, I would probably buy the RX 6000 series over it, right? 1660 Supers are doing like 25 souls. Really probably not a great plan. That sort of thing. Anyways, I can't find it right now. I had seen it. So what? The 1070s are doing... There's the 1070s, but not connected. Dang it. I'll try to do a more in-depth for you guys on that right now. But I would avoid like RX 5000 series right now. Jeff said $10 lunch on me today, brother. Hope your hip gets better. Thanks, dude. It's feeling good today. Minor Illusion, thanks for joining the Goats on YouTube. 2080 Super's doing 60 to 65 solutions a second at 145 watts. The 2080 Ti doing 80 to 90 solutions a second, 170 to 210 watts. And then 1070s. Yeah, so like I'm probably looking at 2080 Ti's just used, right? What are they going for? Let me look on eBay. 2080 Ti. Let's see what they're actually selling for. Completed items. $1,000. One went for 800. One went for 500. Oh, parts only. That was broken. Well, so then what are you looking at wanting to pay for those, right? So what to mine? 2080 Ti. Calculate. $2.31 a day. Let's say 220. Yeah, I don't know where you get. I'd probably be like wanting to pay like. See, it's hard because like what, $5 or $500 or something like that is what I'd really want to pay. But I guess 800 if you can pick them up here and there. It looks like the EVGAs die a lot, by the way, guys. For some reason. A lot of dead EVGAs on there. I'm doing live research. Bear with me. We may have to just stop this, but I did want to see what Marketplace is showing for them. I am going to be putting a whole bunch of 1063 gigs on the network soon. Well, there's a 2080 Ti for... No, that's not real. Scams everywhere, guys. Scams everywhere. Is the answer 3080 Ti's? I love how they're putting like in the ads 20 series GPUs that are non-light hash rate. That's pretty funny. All right. Anyways, somewhere around there, something like that. Any recommendations for PDUs? Yeah, the trip lights are really good. I have the chance to get 3 GTX Titan X cards for 300 CAD each. Would you grab these for mining? Titan X. So they did a lot of those Titans. What's the Titan X again? GTX Titan X. That's like a 1080 Ti, right? Is that right? Or is it like the 2080 Ti? Because there's the Titan X. Titan X. Is that like the 2080 Ti? Or is that the 10 series? That's the 10 series. 384-bit bus, 12 gigabytes of VRAM. So let's just say 1080 Ti performance. Yeah, I guess that's because there's 2 Titan X. Oh. Yeah. I mean, for 300 for a 1080, I mean, I guess, right? Over $1 a day, so a 300-day ROI, under a year ROI. Yeah, Maxwell was 10 series, Pascal was 20. Oh wait, no, sorry. Maxwell was 9 series, right? Pascal 10 series. Yeah, they do use a lot of wattage. Morning, do you factor in future price and difficulty when calculating your ROI? No, because those are unknown factors. Detroit Irish says Zotac has the 20 Ti remanufactured for 1100 to 1300 backstock. Or no, and backstock has them for 899 to 1300. That still seems expensive. I don't know. They do like up to 90 souls a second though. 90 souls. I'm not redundant. All right, boys, that's going to call it for me today. Thanks, everybody, for hanging out for the live stream. Be sure to hit the like button and the share button. I'm taking today off from working out, so I'm just going to go hit the sauna. I need a rest day. I pushed it too hard, and my Aura ring was like, take it easy today. So I'm going to take it easy today and just hit the sauna, which should be nice. I'm looking forward to it. My hat is not T-Mobile. It's Texas Rangers. Texas Rangers. Tomorrow, we'll make a video. Sunday, we'll make a video. And then I will see you guys back for the Crypto Mining Morning Show on Monday, 9:45 Central Time. That's AM. And I appreciate you guys a whole lot. Thanks for being here during the bear market. Let's keep going. Keep calm and mine on, boys. May your hash rates be high.